Good morning, good afternoon, good evening to all connected here from various parts of the world. I like to introduce myself, Samrat Sengupta, professionally. I'm with EKI Energy Services, popularly known as Enkin International. Privileged to have the opportunity to welcome and moderate such a distinguished panel of carbon market stalwarts. EKI is one of the major carbon project developers and carbon credit traders in this in the global arena. From It has started its business 1.5 decade ago from India, and now we have a operation in 17 different countries with a customer base of 40 different countries. That's a short intro of EKI. So before I introduce this panel, I like to spend a couple of minutes for a quick contextualization of today's webinar. We have just concluded, or the climate world has just concluded uh, of COP28, and at the beginning we all have lot of expectations and also some skepticism from the COP, where the parties has able to fulfill some of them, also failed to meet expectation in some. The whole climate debate is quite vast, considering the specific focus and the agenda of this workshop. We try to restrict our discussion topic relevant to carbon market. On market perspectives, I like to highlight few of our observation. On the global stock take adoption, at least we have agreed at a parties level that the path has not means that the parties is not on the path of meeting the 1.5 degree or 2 degree targets and falling short of near about 50%. So the support of private business become more and more essential, and possibly the carbon market is one of the most important instrument in engaging the business in this global decarbonization. When we indicate the carbon market on the backdrop of COP, primarily our mind goes to international compliance market, which has got a strong legacy of Kyoto regime, which was just ready with procedural guideline to transit into Article 6 of Paris Agreement to kickstart the much awaited UN monitored compliance market linked to NDCs. But alas, both Article 6.2 and 6.4, we have to wait for at least another year. The urgency got subdued between the tussle of absolute integrity versus market flexibility. Possibly the stakeholders are losing their patience. On voluntary carbon market, which has recently been experienced a punching bag scenario for any and every externalities for which the VCM was not responsible, easy war, energy security, economic meltdown, etc. etc. And some of internalities too is corruption, malpractices lead to overissuance, which is not an exception in other such kind of market situation, even in financial markets. After 1.5 century of operation, we come across every day some anomalies. Now, has this VCM has suddenly able to bring their small steps towards improvement of integrity as well as transparency on the sideline of COP by announcing towards unified standard. The market sentiment just shoot up. Now the challenge is to meticulously that VCM institution should act fast, act correct, to make the carbon offset as a financial instrument for green investment. Um, these are few of very macro observation I like to put before I now try to introduce our distinguished expert panel. We have Andrea Bosnani. Andrea, hi Andrea. Andrea holding the responsibility of International Policy Director of IATA, the reputed non-profit organization representing business towards a well-designed carbon market, helping the world to meet goal of Paris Agreement. They are committed to deliver global pool of carbon offset both in voluntary and compliance market, helping private sector participation. Andrea is a certified energy risk professional by the Global Association of Risk Professional and a member of community of World Energy Council. Andrea started his career with UN Economic Commission for Europe and spent a substantial time with ETF trading before his responsibility with IATA. Our second panelist is Arjun Dutt. Arjun, with professional responsibility as a senior program lead at Center of Energy Finance uh, of Center for Energy, Environment and Water, CEEW. We all know a leading think tank active in climate and development debate globally. He is public policy professional working to accelerate the flow of affordable finance towards sustainability in emerging economies. We have Juvraj Dinesh Babu, one of my old friend from the very beginning days of carbon market with CDM. He was a CDM expert that time. Dinesh is currently the executive director of Action Data Trust, and he is based out of Singapore. Dinesh worked earlier before CADT, earlier worked with ENY as an executive director, led the World Bank funded State Bank of India operated multi-million grid connected solar rooftop program for India. And while in the earlier during the Kyoto regime, he was having substantial experience with Asia Carbon Group as well as carbon asset management facility and carbon registry carbon advisory business of Idea Carbon. Welcome, Dinesh. And at the last, we have Mr. Pankaj Pandey, the Chief Operating Officer of EKI Energy Services Limited. Uh, Mr. Pandey is a engineer with a management graduate from IIT Mumbai, presently working as the Chief Operating Officer of EKI, leading the EKI team global operation for effective implementation of mitigation projects for successful generation of high quality carbon credits. A climate industry veteran, Pankaj has over 1.5 decades of experience in specializing in implementation of robust business strategies, effective organizational development, and excellent client relationship management. And he has extensive expertise in executing organizational transformation and profitability driver. Prior to joining EQI, he was with CG Power, which is the Compton Greaves. So, welcome this distinguished panel. I like to now invite Andrea for your initial thought on the outcome of COP, considering market perspective. We have 10 minutes each for each of our speakers for their initial observation, and then go with the panel discussion mode.
Okay, thank you very much for the introduction. Very happy to provide some initial remark. I think it's no mystery to everyone tuning in for this webinar that the outcome of the negotiation has not been what we were expecting. There has been no agreement on the two market-based decisions, the one on 6.2 and the one on 6.4. and that of course has been a disappointment for me and for all people working on carbon markets. I don't want to go too technical and present what were the specific points of these agreements. Uh, I will say 3 points though. I will discuss 3 points. The first is that the negotiation was much more political than we were anticipating. The substance of the negotiation was relatively small, implementing and operational details. And my expectation, perhaps my hope, I was too optimistic, was that the big political questions were behind us. We reached a compromise at COP26 in Glasgow, and now it was implementation time. We found out here in Dubai that that's absolutely not the case. Behind the discussion on technical details, there are still very deep differences in what role countries see for carbon markets and what these carbon markets should look like. And during the first week, this was very, very clear. There was a relatively bad mood in the room with parties accusing each other to attempting to renegotiate the decisions of COP26, COP27. Until the end, we hoped that a compromise could be found, but that was not the case. And I think we need to distinguish between a few countries that are ideologically opposed to markets. So they are trying to slow down and block the carbon market agenda within the UNFCCC. And we have the example. I don't want to name too many names, but there are a few countries in Latin America that obviously play that game.
Mm.
But then there are other countries, and here I can name because it's so clear. The European Union, uh, they not they're not opposed to carbon markets as a principle. I believe they're very concerned about the shape of these carbon markets, and they position at this COP was quite tough. They wanted to introduce more oversight and a higher standard of integrity. That for
Mm.
some reason it was unacceptable to many other parties. Um, the US and many other countries agree with them. Does not accept a greater centralization and oversight in 6.2. They believe it's 6.2 is very different from 6.4. It's a party-driven, decentralized approach. And when it comes to imposing very onerous requirements and very strict conditions to the way carbon markets operate, there are some developing countries that, and the LMDC was quite compact, the like-minded developing countries group, they were quite compact and strong. They don't believe that's the way carbon markets should operate. So big political questions brewing and really playing out during the negotiations. Then the second point I'd like to make is that well, we all know the 6.4 mechanism has been delayed by at least 1 year because some key recommendations were not adopted, and therefore the agenda of the supervisory body, the small uh,
Mm.
UN body that is tasked with the operationalization of the mechanism, cannot move ahead. However, I think it's more profound than that. It's not only a delay of 1 year; it's just a very bad signal for about the way the mechanism will operate. Um, I mentioned that the negotiations is very political. The 6.4 mechanism is very politicized now, and I mean, there's a lot of carbon markets professionals in this call. I don't think we would be happy to operate with a mechanism where we don't know what the rules would be next year because a small group of countries at every COP can block, can change,
Mm.
um, and that of course a bad that's a bad outcome because we were all looking at the 6.4 mechanism as something that had the trust
Yeah.
necessary, the buy-in from a large number of countries under the umbrella of the UN. But if that cannot be operationalized in an effective manner, it's a bad signal. But now coming to the positive news, my third point is that while 6.4 is stalling or moving very, very slowly, we can go ahead with 6.2. Um, really, what we needed to start implementing 6.2 was agreed in Glasgow. There has been some clarity in Sharm el Sheikh, and well, we were hoping that Dubai would bring few more elements of clarity. That was not the case, but none of what was discussed at this COP and what was in the draft decision is a prerequisite to implement 6.2, and this has been shared by the delegates of the country that are using 6.2. So Singapore, Switzerland, and Japan particularly. So I think we need to focus on that, and we need to make sure that 6.2 is robust so that more countries have the confidence to engage. I think there's, on the one hand, the bit of a barrier to entry in terms of the capacity you need to use 6.2, implement 6.2. 6.4, it's easier. It's one crediting mechanism. Countries have the experience of the CDM. 6.2 is more complex.
Yeah.
And then the other point is that some countries do not believe this decentralized approach is robust enough. And I think that the work we've been doing, and I say we, I mean the carbon market community on the voluntary market, with ICVCM, with Climate Action Data Trust, all this project to increase the bar on quality, they become very, very important because VCM standards are likely to be the only instrument for the next few years at least. And if we want market to scale, we need to convince at least some of our critics and some of the countries that are now a bit reluctant. So I'll stop here and well, happy to continue the discussion. Thank you.
Thank you, Andrea. I'd like to go to Arjun now. Arjun, the floor is yours.
Thank you, Samrat. I'll build upon the remarks that Andrea made. So, of course, both you and Andrea sort of touched upon that. In terms of Article 6, there was disagreement. I mean, politicization aside, but basically disagreement between, say, parties such as the EU on the one side that expressed concerns over insufficient human rights safeguards, environmental integrity, and transparency pertaining to the Article 6 markets, and other parties that wish to work with simpler guidance. So without getting into the technicalities of this, I mean, I'd like to build upon the earlier remarks and maybe talk about both Article 6 on the one hand and then the voluntary markets. So now, in terms of Article 6, I'm actually just going to quote some analysis that's been done by AITA and the University of Maryland, right, which says that if international carbon markets under Article 6 were to scale with full cooperation for implementation of NDCs, they can surpass a value of 100 billion by 2030. And in a net zero scenario, India could earn up to 12.5 billion annually. However, for this to happen, Article 6 markets must enjoy the confidence of buyers and sellers. So confidence is something that Andrea, referred to. So while it is actually frustrating that progress appears to be slow and, various parties are perhaps wittingly or unwittingly becoming roadblocks towards rapid implementation, I think it's important to agree on rules that foster transparent and high integrity development of both the 6.2 and 6.4 mechanisms, even if it takes, a year or two extra. This is because, we want to avoid a repeat of the Kyoto Protocol regime where buyers and sellers lost faith in the markets entirely. So all the positives that can result from Article 6 cooperation for the cooperative implementation of NDCs is predicated upon buyers and sellers having trust in the market. So while it's frustrating that progress has not been made, no deal, I would argue, is better, and actually many observers have argued, is better than a bad deal, because a bad deal possibly can undermine trust in the markets and prevent scaling up. So no deal is better than a bad deal. However, of course, it is frustrating, as Andrea and yourself have indicated, that progress is not more rapid in this regard. Secondly, again, Andrea touched upon that integrity is a very important facet not just for Article 6 markets, but even more so for voluntary markets, which have gotten a lot of bad press, and there are a lot of concerns, from various quarters regarding integrity. And of course, Andrea touched upon digitalization, climate action data trust, and what have you. But it was encouraging from the perspective of COP, because we're reflecting on developments from COP in terms of not just the collaboration between the 6 major independent mechanisms that came together to agree to work in concert towards promoting integrity. The benefit of all credible crediting mechanisms coming together is, firstly, that of course there is a clear signal to the market that integrity is a major concern for this ecosystem. But secondly, if there are unified standards being developed, there is a possibility of greater interoperability, which makes it easier for investors to navigate this fragmented landscape. So I think that was quite positive in that regard. We've also seen in the months leading up to COP and at COP itself further progress being made by both VCMI and ICVCM on their respective claims code of practice and the core carbon principles. So again, that is something that's positive from the perspective of having unified guidelines for both the supply and demand side to ensure integrity. And finally, it was not just the industry players, but even COP itself, right? The presidency organized a high-level roundtable on unlocking high-integrity voluntary carbon markets. And this was actually quite well attended. It had, I think, Mark Carney attended and Ajay Banga attended. And of course, John Kerry also made remarks separately about how he had faith in the work being done on integrity translating into the scaling up of voluntary carbon markets. So at the very least, some high-level stakeholders expressed confidence that the ongoing work on integrity can translate into greater, flow of capital through the carbon markets, through the voluntary carbon markets. So now it is essentially incumbent on all the players that have come together and have pledged to work towards integrity to do just that. Because as Andrea pointed out in his remarks, we're not going to see Article 6 markets, Article 6.4, not before 2025, and Article 6.2, while it's possible to have pilots. Absence of guidance on reporting and specifically concerns over the authorizations and possible revocations mean that it becomes hard to scale even that. So for the next 2 or 3 years, I mean, clearly, voluntary carbon markets will have to sort of fill the gap in terms of carbon market activity. And now it is incumbent on all the players to come together to ensure high integrity in voluntary carbon markets. I'll stop here.
Yeah, thanks, Arjun, for highlighting the integrity part, taking over from whatever Andrea was talking about. Now, coming to Dinesh, and from climate action data trust perspective, maybe your initial remark and how you looks that integrity will add on to your efforts on transparency to making VCM a possible way ahead in this troubled water.
Thank you, Samrat. After Andrea and Arjuna, I don't think I have enough to say. I would simply say I have agreed with both of them. I can finish in 30 seconds, but I have to say something, so I will say something. It's definitely a gloomy scenario on the official front, but as again the previous panelists have very ideally articulated, that there is no end of the world here. There's a lot of room for innovation towards the most accepted challenges that we have faced in the voluntary market, the transparency and the integrity. So all the initiatives that you saw during the COP, besides thousands of events happening there, one thing which stood out is the initiative around the kind of support towards the voluntary carbon market. It came naturally. It didn't anticipate that the 6.2 and 6.4 would fail, and therefore voluntary carbon market has to show up. No, it was not that case. Throughout, there was a consistent support by all the stakeholders that the natural convergence of voluntary market towards compliance is going to happen. Maybe it has been delayed post the outcome of COP28, but it was a natural journey, and therefore all these players for the first time came together, as Arjun said, the high-level segment or the joint statement by the leading standards all that contributed towards the fact, and in fact reinforced the fact that the voluntary carbon market is there to stay for several years, and then it will play a very critical role in the interplay, and then therefore, as Andrea said, in terms of triggering a lot of new investments and new technologies and new ideas. And the unification of standards, which Arjun said, is going to be the center theme for next year, whether you like it or not, because the stakeholders are very tired in terms of the disaggregated way of fragmentation that is happening in the market. And whether you want to put C before A or B before D doesn't matter anymore. There has to be a kind of a unified approach. Therefore, the stakeholders are looking for such kind of an action. And these standards coming up, joining forces with other entities and initiatives like ICVCM and VCMI and SBTI, I think it's all right, kind of the direction. We all can have a big sigh of relief before the end of the year, just because we had nothing on the compliance. This voluntary is now taking shape to ensure the much needed transparency and the integrity. From the Climate Action Data Trust point of view, I was extremely happy to announce and launch the data dashboard on the last day of the COP. It wasn't planned, please believe me, but we thought that should be the time when we can actually achieve the integration with the single largest standard, which is VEDA. So technically, we were ready the day before, and then we had to launch on 12th of December. And now all the audience here, we can go and visit the climateactiondata.org and then see the data flow from 4 independent registries, including VERA and the CDM registry and the Bhutan National Registry. So we had a very good kind of indication and support from several countries in terms of how they want to join the journey of transparency and the integrity. And therefore, the kind of, I'm going back to what Arjun said, the unification of standards, the kind of whispers in the corridors were also pointing towards all the standards of these voluntary market would be unifying even physically in terms of ICVCM labeling, because the methodology is going to be labeled anyway, and therefore these guys can operate with their own registries in whatever fashion they want, but the standards are going to become ICVCM standards. So if that happens, I think it's a great achievement in terms of the stakeholders getting the right signal towards how they can move forward. And the interplay, I'm repeating this quite often because the interplay between the voluntary and the compliance is a long journey. We all know that. But a lot of countries like Singapore are taking several efforts to bring that as soon as possible. So they also launched an initiative where they are attempting to see how the Article 6 can have a formalized, standardized engagement with the voluntary market. So Gold Standard and VERA are closely working with Singapore to pilot this, and the Climate Action Data Trust would be a party to it in terms of showcasing the kind of the pilots and the reflection of the carbon credits on the respective registries. So that is one aspect of what I see. The positivity around the voluntary carbon market was unprecedented this time, given the fact that everybody believes, and it's a fact, that the 6.2 and 6.4 volume is going to dwarf the voluntary market very soon. If you work out the numbers, the investments that are required and estimated by various agencies, the voluntary carbon market is going to be dwarfed by the compliance market many times. But what we know is that the kind of coexistence is a fact, and therefore we have to start putting the rules of the game for this interplay so that the convergence becomes very smooth, the transition becomes quite predictable, and therefore it triggers scale in the investments to achieve the high ambition in terms of reducing the greenhouse gas emissions. The other part I would say is that in terms of how the initiatives are being now planned, as Andrea said, where do we go from here? So I think most of the audience, I could see around 100+ audience, the pre-COP EKI webinar, and now I'm seeing is almost nearing 200. So that is a kind of anxiety the whole market has. And therefore, what I would say, because many will be having that question in terms of what next, or what I'm supposed to do. And Andrea said very nicely, 6.4, yes, you won't see a kind of a physical progress of registering, validation, verification, issuance by next year. It's going to be definitely postponed by kind of a year plus, actually. But 6.2 is going to take the lead. And there are many kind of activities that are going around. I slightly differ from what Arjun said. The 6.2 structuring is reaching its peak. There are more innovative structures being discussed as we speak. We already have seen an MOU signed between a Singapore private investor and Ghana for a unilateral 6.2 ITMO project, which means Singapore is going to promote secondary transactions of ITMOs already. So the kind of innovative structures, the participation by developing countries, the investment interest shown by the private sector is unprecedented now in 6.2. And the negotiations, as we all agree, were all on the non-consequential items. Of course, the registry infrastructure became a very strong point for negotiations. But having said that, the operational aspect in the next 12 months, I don't think it has even dampened a 1% aspect of it. Rather, it has boosted the confidence for people to go ahead and start doing several structures. The reporting aspect is not going to that much significantly impact the implementation aspects of 6.2. So that is one positive message that I feel the audience who are in the project development space could actively engage themselves in 6.2. And I also heard later in the day when Andrea and other panelists were there in the ITAS post COP28 proceedings to also see how certain risks can be taken by the private sector for 6.4 as well. In those areas where they feel confident of the methodologies, the framework, and other kind of a guidelines that could help shape certain kind of an activities towards shaping up certain projects under 6.4. I'm not saying they will go into a sandbox environment. That is not what I'm saying. But also in certain areas where the confidence levels are very high, that the guidance is not going to go south. In certain sectors, they could still feel confident to move forward under the 6.4. Under the 6.2, the integration of the voluntary standards with certain countries where they are quite open in terms of accepting certain standards under the 6.2. I think they have chosen the right path, and they're going to construct the whole project development based on those premise. Nothing is going to change on the agreements that countries have been signing. So Japan has signed with 27 countries, Singapore has done with 11 countries, and Switzerland is going again in double digits. So the kind of engagement on the 6.2 is definitely the topic for the next at least half a year. And by the time, we all hope that there is going to be some miracle happening in terms of how the parties can come together and make some kind of a effort to bring a lot of practical sense to the market, so that the investors can have a very positive signal on investments. Only one kind of a question for Andrea, which I would like to start before the question session, is there a possibility of having COP 28.5? This has happened, I think, once in the history of COP, which is COP BIS something, BIS. I don't know the actual. I'm not a great follower of these negotiations, but is it possible that due to the urgency of the carbon market, will there be a possibility of the presidency calling for 28.5 to address only certain issues where the solutions could be renegotiated and accepted on a short-term basis? So if that happens, nothing like that would be an excellent signal for the carbon market to again bounce and then try to achieve what they have been targeting. Thank you so much, Samrat, for the opportunity.
Thank you, Dinesh. A lot of positive vibe coming from you. And before going to Andrea on the possibility of 28.5, maybe around SBSTA in Bonn around June, I will like to get to my colleague, Mr. Pankaj, for as on a project developer's perspective, when we are dealing with hard finance and there are so much of uncertainties into the market about standards, about the possible boundaries of VCM and compliance market, and possibly COP has not able to solve that part of it. How, as your perspective on the same?
Yes, so greetings to everyone, and thank you for having me here. I'm as Mr. Dinesh said, the anxiety is to the next level, and so it is with me also to find out few answers to the distinguished panelists here. Greetings to my audience, also the participants also here. Now let me, of course, I mean, again, could be some repetitions, and that's the advantage of talking on the last. But yeah, now it's no secret that there has been no consensus on either Article 6.2 and or 6.4 for obviously a variety of technical reasons, with many countries clashing on the carbon removals and issues of transparency and climate ambition over the final text. Meanwhile, of course, beyond the carbon market, there has been agreement on Article 6.8, which provides opportunities for countries to cooperate towards the achievement of their NDCs without relying on carbon markets. Overall, I am personally very disappointed, because that the lack of deal would probably, not probably, but I'm very sure would delay the market-based and private sector involvement, and hence obviously the goal of 1.5 degrees centigrade or 2 degrees centigrade. Though it's certainly a setback for carbon markets under Paris Agreement, however, the major roles and importance of voluntary carbon market comes and becomes very, very important. Having said all these things, this COP28 also has set the stage for increased collaboration across voluntary, initiatives. On the supply side, those six crediting programs who contribute almost or more than 90% of the total volume in terms of carbon credits, coming together and announcing to collaborate to form a new framework which will be aimed at ensuring the integrity of voluntary carbon market, covering both demand side as well as supply side, SBTi, BCMI coming at demand side and supply side, ICBCM coming in. So with this, I am personally at this side, I'm very happy that there has been a lot of momentum, lot of positive signs towards voluntary carbon market. However, some of the questions as a project developer and a consultant and advisor, obviously we have what is going to happen on Article 6.4, the migrations which was supposed to happen, where the deadline for the application was 31st of December. And secondly, also the question, again, I'm also putting the questions here, is now the role of private players becomes more important. So the question comes why they will come and play that role when the, uh, I should not say politics, but the government itself are not so sensitive about concluding and have those unified, guidelines or policies. That's all from my side as of now. Happy to have the conversation ahead.
Thank you. Thank you. Just I'd like to first approach Andrea on the question which Pankaj just raised, and then Dinesh.
Well, on the question raised by Dinesh,
Mm.
I would love to have a different answer, but I don't think that's on the agenda. When it was clear in the final meeting that there would be no agreement, one group of parties asked for a few more hours to try and broker a compromise at the very last minute. But then at least one other party said that the differences were too deep, and they didn't think they could be resolved in a few hours. And I think it would be the same arguments used against some sort of emergency measure. And also, it's I don't think everyone shares our view that carbon markets are so urgent and necessary. this is still quite controversial. So there's work to do on our side to change that perception.
Yeah.
And
Uh,
sorry,
Please.
I'm afraid, what was the point raised by Pankaj? Sorry, I forgot.
The role of private players in voluntary carbon market. But with this changing regulatory scenario, how can a private player can measure their risks and take part in it? Um, that's the possibly that's Pankaj sir, if I am correct, that's possibly the
Yeah,
uh,
yeah, that's
question.
right. That's
Yeah.
right.
Well, I think we need more clarity. In some countries, we can have enabling regulation. In other countries, it's probably better not to have regulation. But I think we need clear guidance and a clear use case for carbon credits. As I said in my initial remarks, at the moment, there's that clarity is not there, and
Mhm.
naturally, some companies are being criticized for buying carbon credits in good faith,
Mhm.
and some of the major guidance for corporates, primarily SBTI, the Science-Based Target Initiatives, they do not give carbon markets the role we believe they should have.
Mhm.
So I think that has to change, and it has to come uh, uh, from ourselves, from the industry, but also from the countries that see themselves as that see carbon markets as a potential source of revenue, of finance for emission reduction and sustainable development. So I think we need to, as I said, that we need to do quite a bit of work in the year to come.
Uh, I like to point out from the various points raised by all of you, it seems like that we are again gone back to a political discussion, which in the carbon market, particularly the compliance market, which was politically been agreed to somehow during last two COPs, and the supervisory board has worked on the nitty gritty of the technical details, but that has not been thrashed out. It is again gone back to the political arena, and that creates a assumption that the overall carbon market is beyond environment. It's become a larger political slugfest between various parts of the power center in this world. So, Arjun, your thought in that, how we should deal with that? Because that's obviously that what you have highlighted between EU and maybe North America, and considering though it's not really a environmental agenda, with the political development that may happen in North America, creates a dampening situation on the ESG, which is one of the major driver for the carbon market also.
Right, right, right. Thanks for that, Samrat. So, interesting question. We're talking about politics. Let me throw something else into it. Finance. They say
Yeah.
that finance is like a gun. Politics is knowing when to pull the trigger. So, when we're playing finance and politics,
Yes.
one way to maybe get high level agreement is to look at the finance mobilization potential of
Mhm.
international carbon markets, right? Under Article 6 particularly.
Mhm.
Um, so let me give you the example of India. At CEW, we've estimated the capital requirements for India's net zero by 2070 target. Our analysis indicates that this would require capital investments of 10 trillion US dollars in 2020 prices.
Mhm.
Our analysis also indicates that domestic and international sources, banks, NBFCs, capital markets, would organically be able to mobilize only 2/3 of this amount, on a commercial basis, meaning that the 1/3 of 10 trillion US dollars will be the gap. Now, this gap can be bridged through a wide suite of measures, de-risking instruments, concessional finance, and carbon markets, including carbon markets. So if you position carbon markets, while of course there is some, conversation about identifying, and of course, like I pointed out in my initial remarks, the modeling conducted by AITA and University of Maryland, at least speaks to the mobilization potential of this. So if we look at carbon markets as one of the suite of measures, not the only solution, but one of the suite of measures to help mobilize the gap in capital mobilization needed, perhaps that can convince at a high level political, debate to actually press the pedal, or go harder on the pedal in terms of moving forward with the carbon market operationalization. That is one thought, in terms of
Yeah.
this deadlock can be broken.
Dinesh, what just like Arjun has pointed out, to more of a looking this carbon market as a capital instrument, but to make it a viable capital instrument, the both the integrity, we have talked a lot on the integrity side, on the transparency side, which you, particularly your organization, is doing lot of efforts, but the future integration between both the segment of voluntary and compliance, which you possibly climate action data trust has a unique position to deal with that. How you are thinking to make that transparency beyond the technology part of it? Okay, digitization, bringing out the open laser concept in technology is fine, but in the structure of the whole transparency issue, how you are thinking that, how quickly we can deal with that and make it a vibrant one?
That's an very excellent question, and I was hearing very intently what Arjun said. So the Mammoth Fund's requirement, if it is supported by carbon as an instrument, why not? And therefore, the leveraging aspect has to be extremely sustainable and extremely kind of make a significant contribution. Otherwise, there is no point in talking about carbon credits revenue, leveraging investments in any sector for that matter. The whitelist which India has would remain only on paper if the carbon credits pricing doesn't give you that confidence of bringing those investments and technology into the country. Maybe there are 10 other parameters that would decide the future of those whitelist technologies in India, but how important the carbon credits is going to play in those technologies will be a separate subject for CEW to do that analysis, right? And there, the major parameter would be the pricing aspect of it and the politics aspect of it, and therefore you see how it is going to have that blended approach to achieve what is required. Coming to the practical aspects of what you asked, as I mentioned to you, we are already engaged with the government of Singapore on few areas to do the innovative structure in the financing. One aspect is to see how the whole digitalization of the technology could be leveraged in terms of tokenization. Very few understand the benefits of that because it's a very new subject which is being introduced into the climate change business. So the tokenization has two major benefits. One is the fractionalization, and the other one is a partial collateralization. So the partial collateralization requires a lot of financial engineering and the regulatory framework, and even in the fundamental definition of how the carbon credit is defined in a country. Even India is grappling with that as we speak, and many other countries, therefore, have to really be very clear in terms of how to position the definition of the carbon credit, either as a commodity or as a financial product. So that is one aspect of engagement that we are moving forward. So as a digital effort, we already developed a tokenization engine for many companies to look into it and download it as an open source. It is available on climatewarehouse.org, sorry, and the tokenization was also carried out as a pilot transaction between IFC's Carbon Opportunities Fund, Sumitomo Corporation, and the automobile company in Europe. So therefore, that pilot, we believe, was an eye-opener for many tokenization engine companies to see how they can play a crucial role in attracting investments upfront for these kind of projects. The second aspect is another initiative by group of banks called Carbon Place. So Carbon Place is a entity that tries to provide the custodian services, the marketplace, and also structuring on the digital aspects of tokenization as well, where all the banks, you name the top banks, they have been a part of this Carbon Place, and we are trying to see how we can work together and create a lot of use cases towards bringing more confidence in even in structuring the voluntary carbon markets, especially the 6.2 convergence with the voluntary standards, starting with Singapore and the countries where they have already signed up, and also working closely with other countries like Switzerland and Japan, where these kind of models, where there are three objectives very clear. One is the digitalization to increase the transparency and the ensuring the high environmental integrity. Second part is basically to see how the reporting aspect of it, how the structuring aspect of it would meet with the basic financial guidelines. And the third one is how to bring the voluntary market closer to the 6.2, so that new standards and unification of standards and the kind of language that we could have a level playing platform, which is very it looks very far when you keep both the standards away. But I think we have at least mentally be prepared and also got conviction that it has to come together at one point of time. So we are entering into several pilot use cases in the next year. It's quite an interesting framework that you may look forward from Climate Action Data Trust and the Climate Warehouse, and with real-time projects. It won't be a theoretical exercise, but we'll have real-time projects being a part of those aspects, where we'll promote a lot of structuring on the financing side, enticing people to take more confidence in the voluntary market to eventually to move towards a compliance.
Thanks, Dinesh. Pankaj, now with the last 1 year or more than 1 year, we have seen the market performance, particularly on the voluntary side, where EKI was very active. With the recent space which voluntary has started getting, with their last almost more than a year of action towards integrity improvement, and some extra pace in terms of when Article 6.4 is not there, there should be some solution on the carbon market side. But also the pricing is one important factor which attract pre-finance, which is actually been addressed to the additionality discussion.
Yeah.
If we have to say a project will not come up without carbon into place, that's what we need to prove in our additionality, financial additionality.
Yeah.
But when there is no pricing being indicated, and future pricing indication is, or there is some indexing is not available, from a project developer point of view, bringing pre-finance into the system, what is your thought on that?
So I am very optimistic. As I said in my initial remarks, I am very optimistic in terms of these integrity aspects. These integrity aspects are mainly driven from few so-called media houses. I should not use any other word. Media houses, though that. Doesn't affect the developers in terms of what they are doing. To say, and for example, we at EKI have been investing heavily in alternate techs in the form of investment, be it clean cooking initiative, clean drinking water initiative, initiated now biogas, solar cooking. So all these kinds of, and even pilots of biochars and all. So all these kinds of initiatives, a small project developer is continuing doing that. So my feeling, Samratji, would be that with these kind of so-called questions raised, I'm sure still the investors who understands the importance of carbon market will continue putting money into it. Obviously, it has to be seen how the ICBCM and the different frameworks come in place and give more confidence to the market. But at the same time, your point of view of fixing or indicating some price level is also very, very important. Otherwise, how they will be able to justify their viability of putting money into any project development, that's a question mark still remains. But probably after understanding the market for so long, how it has been behaving, not only last 1 year, but if you see last 1 decade, uh, you know uh, it still makes very, very important role, and their returns in terms of what they are investing in terms of carbon credits would not go somewhere else.
Yeah, definitely beyond carbon, the valuation in terms of other co-developmental aspects of any initiative and its related ESG quantification may still holds
Yeah.
the crux of it. Divani, I need your support to get me any query, question raised by the audience.
There are so many questions, Samrat, but I don't think we'll have time to answer most of them.
Yeah,
But I'll pick up couple if you permit
yeah.
me. So,
Okay,
so
okay, sure.
yeah. So one question is about the double counting. They have been asking how this will be addressed in 6.2. So the issue of double counting is definitely a hot topic, and at least from the Climate Action Data Trust, we are working towards creating a framework for the market to use our data platform, the data dashboard, to understand how to carry out a kind of a double counting. And this could be carried out within the country if they have multiple schemes. For example, India is going to have at least two, if not three, registries for three different markets, and therefore it could be deployed within the country also, and also for the voluntary market and for the 6.2. So the double counting is not different for different markets; it's the same. And because India and China and big Latin American countries have a historical export of credits. Therefore, those projects having a phase 2, phase 3, phase 4. So it is very relevant that each and every country deploys a clear framework officially on the 6.2. So that is one response I want to give to one of that question. And the other one is about while we have 20 million carbon credits in India unsold, so what are we talking about? New markets and new credits. So that everybody knows, right? The liquidity has always been a challenge, at least for India. It has been for RECs and CERs. So we have the similar situation. So it has to be seen with it has to be taken with a pinch of salt. First of all, it's a fact, and the government effort to create the fungibility of these RECs into carbon credits was not welcomed by the market, as we all know. It would have given a 40 million carbon credits equivalent in India if the notification would have been favoring that. So we all know that. I'm not saying past is past, but we had to learn a lot. The CDM transition is happening as we speak. So I hope a kind of common sense prevails in terms of how to really now see the differentiation and create a high quality product. You would have heard these words many times from all of us: transparency, environmental integrity, but we have to really work towards achieving that. It's not just a lip service anymore, and you have buyers and sellers come together, the VCM market coming together. So I think we have to really be very careful in creating the next credit in the new market, actually.
Thank you, Dinesh. There is also another query related to the green credit. Arjun, you like to take it up?
I mean, maybe I can just offer some context. So the green credit scheme seeks to offer, a similar kind of instrument to carbon credit for other environmental attributes. So going beyond carbon credit to aspects such as biodiversity, water, and so on and so forth. So so far it has just been an announcement, and it is something that is aligned with the country's life initiative as well. We are yet to see how demand for those credits will crystallize. So at the moment, it is still too early to comment on the green credit scheme. So I'll just restrict myself to these initial remarks.
Thank you. Thank you. There are a few query about 6.2 mobilization in India, because announcement has done almost 8 months, 10 months ago about the list, but nobody knows what is the modalities today. How a project developer, if I have a green hydrogen or a CBG project, where to apply for? Any of you has a response to that? Because that's also a big query for me too.
No, I think the question was addressed to Pankaj, but anyway, I'll take the bait actually. This has been the question whenever I met anybody in COP. Why India is silent on this, why it is not moving forward. The whitelist came, the Apex committee was established. A lot of meetings happened with the private sector on various working groups. And I think there was only a couple of MNRE officials in COP28 who represented the negotiating team. So what's happening literally? What I could see internally is that there's a lot of restrictions, as I mentioned to you. The whitelist will remain a whitelist if you have so many conditions for the acquiring country to come in. Pricing, I completely agree. Pricing cannot be in single digits anymore for those whitelists. But the acquiring party, I don't think not everybody is ready for double-digit transactions as we speak. I have no authority to say that no deals in 6.2 has been only in single digit or double digit. There is no pricing data that is available even with AITA. But I would say that the expectations are extremely high from the government side on the 6.2 bilateral agreements as compared to what is happening between Thailand and Switzerland and Ghana and the rest of the world. So I think that is one major aspect. And the second is that many of those whitelist technologies are happening even otherwise in India. So the question of the additionality and also the fundraising patterns are being closely watched by the acquiring countries as well. Though 6.2 is bilateral, I hope India will not fall a bait into certain aspects that it failed to address in CDM. And therefore, that is another aspect where the differentiation of what kind of individual technologies within that whitelist will qualify for 6.2. The third one I feel is a bureaucracy, which is normally we expect in such a early stage new negotiations. Japan has been hardly negotiating with India for, I would say, at least a couple of years now, and it has not succeeded. It's almost there. It was almost there, but it never signed the agreement between Japan and India. Switzerland also tried their luck, and just before COP, they decided not to invest in India. So I think all the 2-3 factors and more. I don't know all of them, but at least these 3 factors are hindering India to launch the operationalization framework for 6.2.
Thank you, then. There is one question about Nepal hydropower. Let me reframe it. There is a lot of pushback from carbon market, various registry system, particularly on renewables and hydro, considering it is a business as usual scenario. But in energy transition, which is at this moment when hydrogen is still on paper, it's fully depend on end use electrification. So if we are not taking favor of renewable or taking favor of hydro lot of has an environmental impact. But if you consider weightage between the coal power plant and a hydropower plant, and hydropower plant is on the other way, has the capacity to make the grid more and more available to absorb more and more variable power, which is renewable. So is there any level of discussion at the international level, Andrea, on these 2 primary aspects? Hydro is considered as a bat from last many decades, and renewable has become almost out of carbon for the rapidly development, where the development is happening, where actually the plants are coming. Yeah.
Well, yeah, I think you summarized quite well the state of play, but there is the recognition that despite saying that renewable energy is no longer additional, we don't see fossil power plants being retired and a lot of new renewables coming on stream. And this is because there are issues around legacy assets, transmissions, and so on. So there's a lot of work being done around so-called energy transition credits. So it's no longer about individual projects, but it's about the transition of an entire energy system. And there's investment going into this space. Some of it does not have a carbon market dimension, but some of it does. And I would say the ETA, the Energy Transition Accelerator,
Yeah.
launched at this COP by the US State Department. And also the Monetary Authority of Singapore is looking at something similar to channel corporate money into the energy transition of emerging and least developed countries. So I think we've had a few years where, as you said, renewables were almost out of carbon. I think now they might be back, but with a slightly different flavor, and perhaps one that promotes real systemic change as opposed to just projects.
Uh, Arjun, is there any such kind of discussions in Indian diaspora or Indian political diaspora or think tank diaspora on the importance of renewable, but maybe on a different shape? Because India has substantially done very good on renewable, but if you see the distributed part, even on the rooftop, which is grid connected, we are nowhere we, to our initial target even. That requires a real support.
Right. So you're right, Samrat. So in terms of utility scale renewables, that's quite commercially viable in India, and money flows readily at a transaction level at competitive terms of finance. What is needed is that India's scale of ambition is so huge that we need to open up other channels of capital mobilization, particularly the domestic debt capital market, right? But from a carbon markets perspective, also because it's not additional, that's not something where carbon market revenue would readily flow. You're right on the distributed renewable energy, and also I would include not just grid connected systems, but grid connected systems that can also be used for productive livelihood applications. Solar powered textile mill, refrigerator, dryer, and so on and so forth, that can produce revenue generating activities in rural India. So certainly those kinds of activities can be materially impacted in terms of their viability if you have a predictable flow of carbon credits. This is just theoretical, right? So clearly that is an area that can be looked at. And our analysis indicates that distributed renewable energy for productive livelihood applications is a $50 billion market opportunity in India. So
Yeah.
that is the entirety of the market opportunity. But my point is that carbon credit revenues can help bridge the gap between where they are right now and viability. At the moment, of course, these have not been specified in the initial white list of 6.2 activities that the government of India has released. But of course, that can be potentially revised in a 3-year time frame. So maybe something to consider, in that regard.
Yeah, particularly a country like India where the per capita energy consumption is so low, we have to bring commercial energy supply to our every citizen, or all the rapidly developing world. The situation is almost the same. This kind of co-benefit development should come up as priority. May not be initially, it has been part of the 13 list, but definitely a quicker rectification or modification of the list, not waiting for 3 years, may be a good idea. That's a equity issue, not a business issue. Okay, gentlemen, we are overshooting our time by almost 10 minutes. Thank you. Thank you for all of your time and a nice feedback. your understanding of the market, and help us to work for this market in this difficult scenario, where the future looks very bright, but we are still try to find the tunnel to how to reach that future. Thank you. Thank you, everyone.
Very much. Thank you.
I
Thanks,
say-
everyone. Thank you.
Thank
Bye-bye.
you. Bye-bye. Happy New Year.
Thank you all the speakers and participants.